in the first year or 2 years. 50 years from now, right? I mean, the debate will be who's the best Bitcoin-backed insurance company, right? But 20, 30, 40 years from now, and that company doesn't even exist right now.
Capital from Stretch, we put it into Bitcoin, and Bitcoin is going to go up on average 30% a year.
One model is just to provide Bitcoin exposure if people in the country in question can't get it any other way. There are a lot of people in the UK that bought our stock for 4 years because they just couldn't buy Bitcoin any other way.
Their strategy is purely reactive to market signals. When their equity is enthusiastic, they issue shares to buy Bitcoin. When the market is bearish, they simply do nothing and grow at the rate of Bitcoin itself. By staying monomaniacally focused on the credit quality of STRC and the accumulation of Bitcoin per share, they avoid the M&A trap that has killed so many great companies in the past. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
We have seen over the last year a tremendous number of new digital asset treasury companies formed. Many of them focused on accumulating Bitcoin, others on accumulating other crypto tokens. What is your take on how this industry is likely to evolve in terms of the number of players, whether there's going to be a shakeout? If there is a shakeout, will there be consolidation? And most importantly, what could this all mean for strategy as it unfolds? Are there opportunities for the company to take advantage of that dynamic?
Yeah, well, I think every business has to have an operating model that works, that adds value if it's going to grow and prosper. So one model is just to provide Bitcoin exposure if people in the country in question can't get it any other way. There are a lot of people in the UK that bought our stock for 4 years because they just couldn't buy Bitcoin any other way. So if there's a value proposition, in Brazil or in France or wherever, then maybe just you can be a simple Bitcoin holder. I think another value proposition is to issue digital credit, and you can see that Strive and Metaplanet have both pursued digital credit. If you're good at it, by the way, you can do digital credit and not be good at it, right? If you take on debt you can't pay back, right, then that doesn't help the company, that hurts the company. But if you're good at digital credit, that could be another case. A third would be anything that uses capital, right? So if these companies, if they want to generate Bitcoin yield, they're going to have to find some way to generate a benefit from the capital, right? You could underwrite insurance. You could support trading or derivatives trading by posting it as collateral. You could engage in derivatives trading, right? You could literally become a public company with a lot of capital that trades in the digital derivatives market, posting your Bitcoin as the collateral to take the trade and sell the volatility. It's a different business model. What do I think? I think there's thousands of companies that get launched. Many don't succeed. Some will fail. Some get launched doing one thing and then they evolve into something different. Like look at our company, we evolved. In fact, you could argue that the most successful companies evolved through 2, 3, 4 stages in their life cycle. I mean, Apple didn't start out as a phone company for sure. And I think Elon, maybe he ends up being a robot company and not a car company, right? At Tesla. So I think that the winners will evolve and they'll find a niche. And I think that the ones that don't evolve, if you're just a holding company, holding Bitcoin, not doing anything with it, might you get bought up? Yeah, you might get bought. And would that be good for you? You're a lot better off, if you have something people want to buy. For example, Sears, had a future because they had a lot of real estate that somebody wanted to own. And if they didn't own the real estate, it would have been a much worse situation for them. So I think that you're going to see all sorts of examples now, and presumably thousands and thousands of companies get launched and they all do different things. And we're very embryonic early on, like in the first year or 2 years. 50 years from now, right? I mean, the debate will be who's the best Bitcoin-backed insurance company, right? But 20, 30, 40 years from now, and that company doesn't even exist right now. But on the other hand, what about us? Are they opportunities for us? Well, they were an opportunity for Strive. Strive did the deal with Similar, and they closed it quickly, and they were able to build their capital base pretty rapidly. So that's, we see examples of that. There probably will be some mergers and acquisitions of other companies in various space if they put together their various assets in a synergistic way. Our business is laser-like, monomaniacally focused on one thing right now. We want to make Stretch, STRC, the premier credit instrument in the digital world, the best digital credit in the world, and maybe the best credit in the world. If we can create a product that trades with less than 5 vol, that pays you 10% dividend with a stable, $100 value, and we pay a rock dividend, the question is, who would want that? It's like everybody would want that. Why? I mean, why wouldn't you want it? Like, what's the demand for that? It's infinite. So effective. If Stretch works, it's the ideal product, and the company that can create treasury credit based on digital capital has the ideal business model. And so we generally won't get distracted, right? The number one risk for us is a dilutive distraction, right? Everything else on our capital structure that undermines the credit of Stretch, is a question mark, right? So you have to be thinking about that. And then anything we might do that looks complicated or risky or different would anything that introduces a question in the mind of the Stretch investor, can we pay the dividend? That's going to be deemed negative. Anything that introduces a question in the equity investor's mind, can you outperform Bitcoin? So generally we're pretty skeptical on acquisitions because they take a long time, and then you might acquire something that you didn't want that you have to divest, and then everybody wants to talk about how and why and how long it takes. And so I wouldn't say it's not a good strategy for other companies and other investors. There are other companies and other investors for which it's a great opportunity for them, and they can make a lot of money, and they will pursue it, and God bless them. For us, we believe we've stumbled upon maybe the most promising product, STRC. After 20 capital markets transactions and all sorts of credit instruments, we think we found the best one for us and for the credit investor. And we think we found a great business model, right? The treasury company, if you can generate return of capital dividends scalably and scale up the issuance of treasury credit, you've got maybe one of the most efficient business models in the world and one of the most compelling products in the world. So we don't want to do anything that would dilute that focus, undermine the credit of the balance sheet, or distract the management team from what we see is a once-in-a-lifetime opportunity.
The Bitcoin treasury industry is about to go through a massive shakeout, but for those with the right credit structure and a monomaniacal focus, it is a once-in-a-lifetime opportunity. MicroStrategy has found its path with STRC and a rock-solid balance sheet. As the industry evolves, they won't be the ones being bought. They'll be the ones setting the standard for the entire digital world.
Two great things, in my view, came out of the call. One, the whole guidance on the STRC rate. I mean, that's brilliant. Really love it. And it's going to help people like me who are buying STRC, as kind of, a solid retirement type of asset to understand where it's going. And I have a question related to that, but I'd like to put it to the end. The second thing that I thought was really important was the notion that you're going to upgrade and play a leadership role in the technical direction of Bitcoin. I think that's fabulous and a great way of addressing all the FUD around quantum, which I think has probably scared off a few of the bigger institutions who are looking at it. They're kind of saying, hey, who controls this whole thing? Just back to first principles, I want to just kind of run through how I look at this and see if you as a management team agree. I'm a value investor. I look for asymmetry. And in my view right now, MicroStrategy is the most asymmetric value investment in the world. And most people don't understand it. And it's kind of stunning to me. My partner, David Foley, and I, we did a model. We've done several models, and we've looked at it and said, if Bitcoin stays at $50,000 for 4 or 5 years, you can't break this company. It's unbreakable. I mean, the dilution, we calculate the dilution would maybe be 15 or 20%. So the downside case here, in our view, is really covered, as a result of the fact that the debt's unsecured and the interest rate on it is very, very low. Some of it's convertible, as we all know, and the preferred is really equity. So to me, you've got an unbelievable situation. I think a lot of people listening to this call are kind of wondering, hey, what's going on with the stock price? What's going on with Bitcoin? My view on that is just that what's going on with Bitcoin is liquidity is really tight. And, this is what's going to drive a big print at some time relatively soon. And it's also what's driving the stock market down. And Bitcoin has always been kind of a leading indicator of where, how much liquidity is out there. And so, things are tight right now. And you see it, gold's getting hit, silver's getting hit, all the sound money assets are getting hit. But we know the debasement trade is alive and well because gold and silver have just been on a tear. And this reminds me very much of 2020 when gold and silver led first and Bitcoin followed harder. Bitcoin went up 6x in October of 2020 after gold had gone up 45%, when Powell pivoted and then COVID came along. So, to me, what's going to happen here is this thing is going to be, a 2-bagger, 5-bagger, 10-bagger, and most people don't really understand it. And the reason that's the case is kind of said, where he said, commodities are a very, very hard business to invest in because they have long cycles. And the average investor, who's being marked quarter to quarter, month to month, year to year, can't show long time preference. He didn't use those words, but he was essentially saying the same thing, which is Saifedean's point. And, if you have the long time preference, you realize this is a commodity that has a fixed supply. The asymmetry, it's absolutely blowing my mind. So I just want to say, congrats for all you're doing. And I think it's, a no-brainer that this is going to be a standing upside investment. I do have one specific question related to the stretch product, and that is this. You're going to adjust it. Okay, so maybe you have to adjust it in a while to get more people to buy it. Fine. At some point, this is going to be a fabulous product. Everybody's going to want it. And if you kind of set the price at 100, could it ever adjust down? I mean, I'm buying it and I'll probably gift it to my kids because the tax basis will be 0 and I'll never sell it. Could you think about setting a lower boundary on the yield? 11%, that's attractive. 9, 8, 7, those are all attractive. If it got so attractive that the yield on it started to go down to 5, 4, 3, 2, 1, that would be, if people looking at buying it, thinking long term might wonder, is there a boundary below which this thing can fall? And we'd be more comfortable buying it if we knew there was such a boundary on the yield.
Yeah,
Go ahead, Phong.
I can start, Larry, and we agree with all your points. I think there's a significant misunderstanding of the leverage on the balance sheet and how we're going to service our convertible debt over time, and these ideas that if Bitcoin price goes below our cost basis, that becomes an issue. And as I stated, Bitcoin needs to go down to $8,000 a coin and sit there for 5 years up until 2032 before we really have a problem being able to satisfy the convertible note. So thank you for pointing that out. On the rate on stretch, right? Right now, technically the bottom of the rate would be SOFR, but we think of the fact that we get capital from stretch, we put it into Bitcoin, and Bitcoin is going to go up on average 30% a year. So anything that we pay less than, call it 20%, is accretive to our shareholders. Right. So I don't think it's something where you should sit there and think that we're going to drive it down to SOFR. Right? If stretch price goes to 100 and sits at 100, we might take it down a couple percentage points. But I don't think, and obviously it depends on where SOFR goes, but I don't think it's something that someone should think we're going to pull the rug out from under folks and drive it down to 1, 2.
Yeah, I think stating that publicly to people who are buying stretch would be important, just so people understand. And if you were to say something along the lines of, we're not going to let it go below 7 or something, because it's going to get to be really popular at some point in time. And those of us who are buying it with multi-decade timeframes, right?
Yeah, another point to make is we can't lower the rate more than 25 basis points a month. So we're always going to be very incremental. And we would only lower the rate when in such a way that we thought it would stay in that zone of 99 to 101. Like we want to keep it targeted at 100. So, you might 5 years from now find out that the rational credit spreads that the market assigns us are 300 basis points instead of 600, and that people would like to buy this thing at 400 basis points over SOFR, maybe, but we would very gradually get there, and we would still expect STRC to be trading around 100. And so we're not looking to do anything that is jarring to the price. We want the price to be stable. As a practical matter, the reason that we would lower the dividend rate would be we had such an avalanche of demand. We had too much demand, and people want to buy infinite, and we don't want to sell infinite because we'll drive the BTC rating of STRC down. Right? Like if hypothetically someone said, I want to buy $100 billion of STRC tomorrow, you can see how we don't want to sell it because right? Yeah, because then that reflexive, and that would undermine the credit quality, and that would increase the volatility, and that, that kind of works against everything. So luckily for us, and practically that's not going to happen, right? Like, they say, it's good that we have time because otherwise everything would take place at the same time, right? all at once. We don't want stuff to happen all at once. So it will happen progressively. We'll be very thoughtful about it. Our goal is always for it to be extremely compelling to attract capital. And at the point where we feel like we've got too much capital, it would be a circumstance, Larry, where there was massive success of STRC and Bitcoin was lagging, and MSTR equity premium was lagging, and there's that weird situation where it's hard for the company to increase its collateral base in order to back the credit. And then we would say we have too much demand for the credit, so we need to click it down. But if there's over demand for the credit, it would still be pegged at 100 when we take it down 25 basis points. And so we're going to responsibly manage this so as to minimize volatility, maximize stability, and in all likelihood, it's going to be excessively compelling in terms of dividend rate for quite a while, because even though you believe in Bitcoin as collateral and I believe in Bitcoin as collateral, we've got a lot of work to do with credit rating agencies and the Basel rules and traditional finance establishment before they recognize it as being good collateral. And as long as they don't, then that means probably the spreads are going to stay pretty compelling.
Bitcoin has been lagging due to tight liquidity. But in Lepard's view, this is just a coiled spring. Bitcoin is a leading indicator of liquidity. And when the big print inevitably arrives to service the massive national debt, Bitcoin will respond ferociously. We aren't just looking for a move up. We are looking for a 2-bagger, 5-bagger, or 10-bagger as the world realizes the fixed supply nature of the asset. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.